Hi, I'm Roger Montgomery from the Montgomery Fund, and welcome to this week's Video Insight. Well, as we approach Christmas, it appears I've delivered a gift that will keep on giving. My criticism of one aspect of technical analysis stirred all types of responses, many of them positive, but many angry with my apparent lashing out at technical analysis as a whole. Predictably, there's been vehement objection to the suggestion that technical analysis doesn't work. But did I say that? Or did I say there's little evidence that support and resistance works? Also predictably, despite the streams of opposition and even hateful diatribe, nobody presented any evidence that support and resistance levels are reliable. Given how difficult it is to quantitatively define support and resistance, it's almost impossible to test. So I'm not surprised that no one has fronted up with any results. We've had everything from conspiracy theories to claims active managers don't beat the market. Regarding the latter point, the majority of small cap managers in Australia actually have beaten the market, and over multiple timeframes. Some chartists, of course, who use support and resistance levels will probably resort to handing in their trading statements as evidence they work. Before you do though, let me quote. I'd like you to imagine a notional coin flipping contest. Let's assume we get 225 million Americans up tomorrow morning and we ask them to all wager $1. They go out in the morning all at sunrise and they all call the flip of a coin. If they call correctly, they win $1 from those who called it wrong. Each day the losers drop out, and on the subsequent day the stakes build as all previous winnings are put on the line. After 10 flips on 10 mornings, there'll be approximately 220,000 people in the United States who have correctly called 10 flips in a row. They'll each have won a little over $1,000. Now, this group will probably start getting a little puffed up about this, human nature being what it is. They may try to be modest, but at cocktail parties they'll occasionally admit to attractive members of the opposite sex what their technique is and what marvellous insights they bring to the field of coin flipping. Assuming that the winners are getting the appropriate rewards from the losers, in another 10 days we'll have 215 people who successfully called their coin flips 20 times in a row, and who, by this exercise, each have turned $1 into a little over $1 million. $225 million would have been lost, $225 million would have been won. By then, this group will really lose their heads. They'll probably write books on, quote, how I turned $1 into $1 million in 20 days working 30 seconds a morning. Worse yet, they'll probably start jetting around the country presenting seminars on efficient coin flipping and tackling sceptical professors with, quote, if it can't be done, why are there 215 of us? By then, some business professor will probably be rude enough to bring up the fact that if 225 million orangutans had engaged in a similar exercise, the results would have been much the same. 215 egotistical orangutans with 20 straight winning flips. End quote. That's Warren Buffett, and those who think support and resistance works need to consider what he's saying. If you are thinking of starting out in investing and the idea of drawing lines with rulers under price charts and then trading breakouts and retracements is your ticket to financial freedom, please think very carefully. How, without a chart, would you know that the float of Vita was a good one or that the float of Collins Food was a bad one? They were new listings with no charts, and yet you are able to distinguish the good ones from the bad ones. You didn't need a chart to do it. The stock market is a place where you have the opportunity to buy a piece of some amazingly profitable Australian businesses, and occasionally the herd is willing to sell them to you at ridiculously cheap prices because Korea threatens to blow up Japan or a new Fed chairman triggers some consternation. Look at the BRW Rich 200. They're mostly business owners, and I challenge you to find a chartist amongst them. For those who are heading on holidays, please have a happy and safe Christmas. And for those of you who aren't, I look forward to seeing you next week. Please follow us on Facebook and Twitter.